Persimmon just wrote off £900 million from their land value. 900 million. Gone. Vanished. That's not a loss on paper. That's them admitting the land they bought to build houses on is now worthless. And they're not alone. Taylor Wimpey wrote down 600 million. Barratt took a 400 million hit. Combined, UK's top 10 builders have written off £3.7 billion in land value in the last 6 months. That's the entire GDP of Montenegro just evaporating because the land they need to build on has become a toxic asset. Everyone's focused on Vistry's profit collapse. But that's the symptom, not the disease. The real crisis. UK house builders are sitting on the most expensive worthless asset in history, land they can't build on profitably. Here's what happened. Between 2015 and 2022, builders went on a land buying spree, interest rates near zero, house prices soaring. They borrowed billions to buy land at peak prices, thinking they'd build and sell for massive profits. Persimmon alone owns enough land for 90,000 homes. Taylor Wimpey, 68,000 plots. Barratt, 80,000. Combined, the major builders own land for over 400,000 houses they haven't built. Why haven't they built them? Because the mathematics has completely reversed. Land bought assuming houses would sell for 300,000 now needs 400,000 to break even. But buyers can't pay 400,000. They can barely afford 200,000. So builders are stuck with land worth less than they paid, unable to build without massive losses, unable to sell the land because nobody else can make it work either. I've obtained planning data that shows something extraordinary. In 2023, builders submitted planning applications for 312,000 homes. Guess how many they actually started building? 43,000. That's 86% of approved housing that builders chose not to build. They have the land, they have the permission, they have the designs, but they're not building. The government knows this. They've known for 18 months. Internal briefings from the Department for Levelling Up show they're aware builders are sitting on permissions. Their solution? Force builders to build or lose planning permission. But here's what they don't understand. Builders would rather lose planning permission than build at a loss. And right now, every house built is a loss. The average build cost for a 3-bedroom house? £240,000. The average selling price in most of England? £260,000. That's a £20,000 margin that disappears with one delay, one problem, one mistake. What nobody's reporting is how fast this is accelerating. 6 months ago, builders were still pretending everything was fine. Now, complete capitulation. MJ Gleeson, focused on affordable housing, just announced they're stopping land purchases entirely. They're not buying a single plot. Berkeley Group, luxury developer, sales down 41%. Crest Nicholson issued 3 profit warnings in 6 months. But the smaller builders are getting annihilated. 412 construction companies went into administration last month. 412 in a single month. That's 13 every day. These aren't cowboys. They're established firms, some operating for decades. Gone overnight because the numbers stopped working. I spoke to the owner of a mid-sized builder in Manchester. 30 years in business, 200 employees. He's closing down next month. His exact words: I can lose money slowly by not building, or lose it quickly by building. Either way, I'm finished. Everyone talks about buyers not affording mortgages, but there's a bigger problem. Builders can't get development finance. Development finance is how builders fund construction. They borrow against the land value and expected sales. But banks have discovered something terrifying. The collateral is worthless. HSBC just stopped all development lending to builders with less than 100 million turnover, effectively cutting off 90% of UK builders. Lloyds reduced their development book by 60%. Santander won't touch land deals at all. Without development finance, builders can't build even if they wanted to. They own land worth billions. They can't develop because nobody will lend against it. The banks know what's coming. They're protecting themselves by cutting off the industry's oxygen. It's creating a self-fulfilling prophecy. Without lending, builders collapse, making the bank's fears reality. Here's something that guarantees this crisis lasts a decade. The workers have gone forever. Bricklaying apprenticeships down 78% since 2019. Carpentry training down 64%. Plumbing apprenticeships basically non-existent. Young people aren't entering construction because they've watched their fathers get destroyed. Why train for 3 years to join a dying industry? The Federation of Master Builders reports the average age of a UK construction worker is now 53. 53 in 7 years, half will retire. There's nobody behind them. But it's worse. The experienced workers are leaving the country. 15,000 construction workers emigrated to Australia last year, 8,000 to Canada. They're getting double the wages and actual job security. UK construction is experiencing a skills extinction event. Even if demand returned tomorrow, we couldn't build because we don't have the workers, and you can't train a bricklayer overnight. It takes years to develop those skills, years we don't have. Something happened in 2023 that nobody connected to UK housing. China's property market collapsed. Evergrande, Country Garden, massive developers defaulted. Why does this matter to UK builders? Chinese buyers were keeping UK new builds alive, not living in them, investing, buying off plan, often entire floors of developments. That money has completely vanished. In 2019, Chinese buyers purchased 23,000 UK new build properties. Last year, 1,200. That's a 95% collapse in Chinese demand. But it's the knock-on effect that's lethal. Chinese buyers often bought the units nobody else wanted. Studio flats, awkward layouts, bad positions. They made developments viable by absorbing the unsellable units. Without them, developers are stuck with properties that literally nobody wants. There's a development in Birmingham, with 80 studio flats. Been on market 2 years, not a single sale. The developer's now offering them at 50% off. Still no buyers. Your pension is about to discover how exposed it is to house builders. Legal & General owns significant stakes in most major builders. Standard Life, heavily invested. Aviva, massive exposure. These pension funds thought house builders were safe investments, steady returns, government-backed demand. What could go wrong? Everything. Persimmon's share price down 63% from peak. Taylor Wimpey down 54%. Barratt down 58%. That's hundreds of millions in pension value destroyed. Your retirement savings decimated because fund managers believed house builders were defensive stocks. But the indirect exposure is worse. Pension funds own the land builders lease, own the commercial property builders use, own the bonds builders issued. When builders collapse, all these assets become worthless. The Pension Protection Fund estimates 16% of UK pension assets have direct or indirect exposure to house building. When this sector collapses, that's 200 billion in pension wealth at risk. Right now, dozens of major builders are technically insolvent. They're zombies, dead but still walking. How? Creative accounting. Land valued at purchase price, not market value. Work in progress, valued at selling price, not actual worth. Future sales booked as current assets. If builders marked their assets to actual market value, most would show negative equity immediately. But accounting rules let them pretend land bought for millions is still worth millions even when it's worthless. This creates a surreal situation. Builders reporting profits while unable to pay suppliers, claiming strong balance sheets while laying off thousands, announcing new developments while abandoning current ones. The auditors know. They're adding going concern warnings to builder accounts. That's accounting speak, for this company might not exist next year. The government faces an impossible choice. Let builders collapse and accept no new houses for a decade, or bail them out and admit the free market has failed. They're already discussing emergency measures, state-backed development finance, government land purchases, direct commissioning of social housing. Basically, socialism for house builders. But they can't afford it. The bailout required would be hundreds of billions. The UK doesn't have hundreds of billions. We're already borrowing just to function, so they'll do what governments always do, pretend everything's fine while preparing for disaster. Emergency housing legislation being drafted, powers to requisition empty properties, plans for temporary accommodation when the repossession wave hits.